Welcome back to Fast Money. Check out Bitcoin soaring nearly 20% in today's session. The cryptocurrency was already up big, and then Elon Musk tweeted this, quote, spoke with North American Bitcoin miners. They committed to publish current and planned renewable usage and to ask miners worldwide to do so, potentially promising. That tweet sending Bitcoin even higher. And check out the wild moves since last Monday. 3 double-digit drops during the past week. Bitcoin is still more than 40% below its highs, but one crypto pro is having a case of deja vu, and he thinks this recent volatility could be a precursor for a big bull run ahead. Joining us on the Fast Line is our very own Brian Kelly. He's sort of a Bitcoin master himself. Okay, BK, explain to us what's going on here.
So, well, what's going on is actually fairly normal for Bitcoin. It doesn't feel that way if this is kind of your first time getting into cryptocurrencies, but this level of volatility is very normal for Bitcoin. Secondarily, what I've been looking at is really what happened during the 2017 bull run, which we all remember fairly well. But if you recall, in July of 17, you saw China ban trading there. And then again, in September of 17, they came out and they closed all the exchanges. Well, in July of 17, we had a sell-off just like we had this weekend because China banned mining this time. And so it looks uncannily exactly like that pattern. And to me, if you look at it, the next part of this is just a massive rally. In 17, Bitcoin rallied from 2,300 to 19,000 over the next 6 months.
I just think it's funny that you can find patterns at all when it comes to cryptocurrency trading. But I think Dan has a question for you, BK.
Hey, Beeks, I love your work. So quick question, because it seems like there's a lot of focus on the Bitcoin here. You know, you got all these finfluencers like Elon getting everybody turned around. And it seems like we should just be focusing on the Ethereum and the Ethereum network. And prior to this sell-off, we saw massive outperformance. We see so many interesting things going on being built on that network and protocols and the like. Why are we spending so much time on Bitcoin and Bitcoin mining when we know that Ethereum is going to be moving to this from this proof of work to proof of stake this summer? Isn't that what we should be focused on?
That's a fantastic observation and question, Dan, and I couldn't agree with you more. I could care less what Elon Musk thinks about Bitcoin, and Bitcoin should care less about it. It's a decentralized currency. But where the excitement is right now is where Ethereum's concerned. They are changing their algorithm, so it is using about 99% electricity than Bitcoin. They are changing their monetary policy, so under certain circumstances, you actually might get a deflationary currency. And then finally, almost all of DeFi is built on top of it. So there's a lot of activity on the Ethereum network, and you're right, it has outperformed Bitcoin at this point. That's not to say I don't love Bitcoin, I still do, but I think at this point in the cycle, Ethereum, if I had to choose between the two, Ethereum is probably has got more upside to me than Bitcoin does.
Hey, BK, it's Karen. Thanks for coming on. So you've been in this game a long time. This kind of volatility seems a little different with the intraday moves being so big. I don't know, is that because maybe it isn't tapped, maybe it just appears that way, but it isn't so. But does the retail investor and their, the Coinbase and the I don't know, other retail investors that weren't in Bitcoin in the last few cycles, are they part of what's happening here? Are they much quicker in and out? Or what's causing these big gaps down and up within very short time spans?
Yeah, it's a good observation because this was a pretty big sell-off. I mean, even when I talk about the one in 17, that was a 20% peak to trough. This was almost 50% peak to trough. There's two things going on. One, you have a heck of a lot more leverage on the speculative front. A lot of the Asian exchanges, you can get 100-to-1 leverage on futures. That has grown exponentially in the last couple of years. The second part is this kind of lending portion of the Bitcoin market where people are peer-to-peer lending and getting paid 7-8% yield on that. But the thing is that collateral automatically liquidates if Bitcoin falls down. So you've got a lot more leverage going in from both sides, from both the speculative traders as well as those people who are holding it but trying to get some yield. And that contributed to this big drop. At the same time, you had just a huge amount of volume come in when exchanges broke, basically. You couldn't log on. So you had no bids out there, everybody coming in to liquidate, and it really created this cascade of selling. So it did exacerbate the volatility this time. But again, it's forced selling. It's not a fundamental change. It's just forced selling, in my view.
Hey, so BK, two really important questions here. The last two big sell-offs in crypto have taken place over the weekend. Does that have something to do with the fact that futures markets are generally closed and they're obviously used to hedge a lot of positioning? And then the other question, the Wall Street Journal had this big article on Uniswap today, a decentralized token exchange here. Are we seeing a lot of activity on decentralized exchange? Is that actually exasperating the volatility?
Yeah, so the weekend phenomenon is fairly well known in Bitcoin. You often get a dip like on Saturday night. A lot of it has to do with the fiat rails, the U.S. dollar. The banks are closed, right? So even if you want to add more money to it, you can't wire money in to buy Bitcoin, let's say to Coinbase or something like that. So the weekends tend to be a little bit more thin trading. It gets pushed around a bit more. On the decentralized exchanging, DeFi is just absolutely exploding. To me, that's the promise of crypto. It's the disintermediation of financial services, and you're seeing it in Uniswap. You're seeing, 40x growth over the last year in the volumes there, and that is where everything is kind of shifting to. Not to say that centralized exchanges won't have their role, but DeFi and decentralized, or what they call DEXs, are definitely having their moment, and I think they're here to stay.
Thank you, BK, for joining us here tonight. Tim, I want to get you in here real quick. What do you make of this trade? I mean, are you interested in trying to play these big weekend volatility moves, or is this something you want to stick away from? Because, I mean, who the heck knows why these things are moving the way they're moving?
First of all, when I hear 100-to-1 leverage, I mean, it's shocking. And we talked about last week how Bank of America's fund manager survey put Bitcoin at a very, very crowded trade. In fact, one of the more crowded trades they'd ever seen. So again, I think market positioning, BK's talked about a history of volatility in an asset class that I think largely expects this. And so Dan gets into the fundamentals and really the use case and the platform and even some of the evolving technology around Ethereum and that platform. I think that's very real. I think investors need to be less concerned with FOMO and really understand where they want to make allocations for the long term. But no, trading weekend volatility, it's how you get your hands cut off.
I think next time we need to have Karen's daughter in here. I learned that she wanted to invest her bat mitzvah money in Bitcoin, and that was a big trade she could have made, Karen. That was, whew, what a smart girl you've got there.
Giant mistake, giant.
Yeah. Speaking of FOMO, right?